Well, give us your analysis of things as it played out on the bourse yesterday.
Okay, well, there's dull performance, marginal increase in the NSE 20 share index to 3188 points. You've seen minimal foreign activity, probably due to the developments in the global economy. We've seen manufacturing gains in the US, Europe, and increased confidence for both businesses and households. So probably foreign investors are looking at opportunities in their home markets. Yeah.
That's quite a shift from what we've been used to, you know, the fact that we've got now local investors supporting bulk of the trade that we are seeing on the market here. But yes, the broker I was chatting to yesterday saying that still within the domestic arena, we've got retail investors making up 20% of trading volume, while 80% is coming from the institutional arena. So is what we're seeing here, the uptick in the markets, being supported by mainly institutional players on the local front?
Well, that will always be the case because institutions always have long-term funds and have a higher purchasing power. Retailers have really taken a hit from increased cost of living. We have energy prices going up, the drought, food prices going up. So investment will take a backseat for them.
Especially in a context, I guess, where we've got retail investors now opening up their eyes to the opportunity that the debt market presents, with a number of bonds having come to the fore. Do you see in the retail investors' mind that debt is now becoming senior to equity investment?
Well, we know of the inverse relationship between the bond and the equity market. And now that the equity market is declining, it's a flight to safety to the bond market. And there's also been adjustments in the bond market to attract retail investors, whereby we find the government reduced the entry level, say for T-bills, to 100,000 for retail investors. Also, the infrastructure bond having attracting the interest for investors. So it's a situation whereby people are looking for safety in the bond market. And recently, there have been oversubscriptions in most issues in treasury bills and bonds.
Well, having said that, we had Crown Berger, the top performer yesterday, registering an 8.9% gain by the close there. And we saw local traders really wiping out all major supply yet again. So where we've got local retail investors really, diverting their attention to this counter, what's driving the attraction there, given the context you've just outlined?
I think it's just speculative trading because as at opening of the markets today, there was supply with no matching demand on the same counter. And notwithstanding the fact that they had reported a decline in earnings and the fact that the commercial paper has been approved, there are also questions being raised about their ability to repay their debt obligations.